Hi everybody, it's Marcus calling from MMA Properties with an Arlington market update. So every month we go through and we give you an overview of what's happening in the market. This month's no different, and so let's get started. Take a look at what's actually happening, because as many of you will know, there is a lot happening in the market. So let's get started, shall we? So relatively easy to get information today. There's lots of it out there, but what's much more difficult, and that's what I'm going to focus on here this evening, of course, is actually to make sense of that. So the analysis that sits behind the data, if you want, and that's what we're going to focus on tonight. You'll see the data, but the analysis will come with it. So hope you enjoy that. We do study the markets. If any of you have watched what we talk about here, both Danny and myself, Danny's not here this evening, but you will know that we really do focus on the market in detail. And you'll see that with some of the data that we'll bring to the fore here today. We obsessively, I think that's probably the right word, but you'll see how as we move forward. We do love what we do in terms of being able to explain what's happening in the market. So let's talk a little bit about the Arlington market. Specifically, we'll talk about single family, condominiums, and then I'll be relatively brave to give you my predictions for the rest of 2021. Need another month's worth of data to really get sense of where we are, I think it's fair to say, but we can already see some trends as we've had 1-2 months worth of home sales to actually work on, but we can certainly, we'll give it a go anyway. So there's going to be lots of information I'm going to show you this evening. And where do you get this? So first place you get this is the Arlington Market Review. It's cram-packed with information. Here's an example here. Actually, lean over here and give you the Arlington one. I have it for a number of towns here as well, but here's the Arlington one. Cram-packed full of statistics. Both in terms of what's happening with with what the data is, but then the analysis that goes along with that too. So that's the Arlington Market Review. It is on our website. If you want a paper copy, we have lots of them. You just have to ask, and we can get one of those in the mail to you. It was delivered to every house in Arlington, I should say, back in January. So if you missed it or you put it in the recycle, shame on you. Lots of good information in there. But anyway, there we go. So that's one place. That's kind of a historic perspective, because clearly 2020 was an important year. To bring it bang up to date, our website's got lots of information on there, maproperties.com. There's a statistics tab under there. Lots of stats there, about a dozen different stats that we have. Maybe more, actually. I think even 15. I added a few the other day, actually. So lots of detail, not just for Arlington, and this is important if you're perhaps a seller looking to move somewhere else. Which town should I move to? We have about 50 towns worth of information within this, so you'll see some inventory levels and so on, average prices. We have that for a lot of different towns, not just Arlington. So feel free to go poke around the website. You're looking at towns, where should I go? Property tax, that's up there. I just updated that the other day. So there's lots of information, maproperties.com, under the statistics tab there. So let's get into the meat of things and talk a little bit about the single family market. Here's the first graph I want to show, and this is inventory level. It's kind of interesting, not necessarily the absolute numbers. What's more important is to look at the trend, and this is the case with many of the graphs that I'll show you. And we'll talk a lot. This one is specifically, as I go back to 2006, we're looking at the relative trends of this graph. So I have a new toy for those of you who remember from last month, so I'm going to use it. There you go. So here we are, inventory levels, January 06 through 2021. Inventory levels are a snapshot of the number of homes that are available to buy. I actually do it on the first of the month, but it's really a snapshot of the number of homes that are available. So back in 06, long time ago, they were relatively high, but here's the important area here. This area I've highlighted here is the crash. As you can see, the inventory level rose as more sellers were in the market, but less buyers were in the market. Inventory level is how much is left, if you like. Sellers bring homes on the market, sellers consume homes, and therefore what's left is the inventory level. It increased in that crash period. But then interestingly, as we got into 2012, so it began to decline. More buyers coming into the market. It declined even further in 2013. What's happening here is this. First-time home buyers drove the rebound from the crash. And that's what we're seeing in 2012. First-time home buyers coming back into the market. But not enough supply to satisfy those first-time home buyers. That only occurred in 2013 when the sellers realized, wow, buyers are back. Now I'm in a position to sell my home. And so sellers came back in the market, and so did the buyers. And so inventory levels declined and remained relatively low all the way until we get to about 2019. And actually, if you look at where my kind of cursor is here, the end of 2019, end of 2019 there, that was a kind of key time end of 2018 was a key time when people were beginning to think about, is there a downturn coming? What happened when the downturn, or even the perception of a downturn happens, sellers think, I need to bring my home on the market potentially before house prices decline. Buyers think, maybe I'll wait, because if house prices have declined, I don't necessarily want to buy at the peak. And so the end of 2018, we saw a marked increase in the inventory levels as sellers began to kind of hedge their bets. But buyers are being just that little bit reluctant. Those relatively high numbers continued through 19. And then we had 2020 with COVID. So you can see in that area over here, that's kind of the impact, initially the impact of the perception of a downturn, and then the impact of COVID. I have more to say about this peak here. It's actually condominiums. But as you can see, as we now have some information for 2021, those inventory levels are very, very low. In fact, lower than we've seen back since sort of 2017. If we look at the number of home sales, as you can see in this graph, blue is existing homes, green is new construction, and the orange is the off-market teardowns. It's been relatively static, the number of home sales. And it fared relatively well in 2020. There was this big question 14 months ago, I guess now, whether what the housing market was actually going to do. But as you can see, it fared very well. But there really isn't a lot of headroom. There isn't a lot of sellers looking to bring their homes on the market over and above the number we see about 240, 260 if you include new construction. So relatively static in terms of that. Compare that to, for instance, Lexington. We saw a marked increase in the number of home sales in 2020. Lots of demand, sellers in a position to put their home on the market, and so the number of home sales increased. We don't see that in Arlington. There just wasn't that headroom in Arlington for more homes to come on the market. We always track as a great metric of buyer demand the sell price to the list price ratio. Imagine a home comes on the market at 800,000 and it sells for 800,000. It's a 100% sell price to list price ratio. As you can see, the average in Arlington, we're running about 103, 104% now since 2014. So that's a relatively high number. In comparison, surrounding towns, Belmont, Winchester, Lexington, for example, around about 99 to 100%. So much stronger market here in Arlington than we've seen in surrounding towns. And I have more to say about that, what's driving the housing market in Arlington as we kind of move forward. Interesting to look at this ratio now. This is the kind of 10-year trend. What's happening month on month? Now, so we've got two things we're showing on this graph. The blue bar is the number of homes that sold in any given month. The orange bar is the sell price to list price ratio for those homes. Now, what's important to know about this graph is that this is a lagging graph because homes that closed in May, for example, went under agreement, came on the market and went under agreement about 6 to 8 weeks prior to that. So about 2 months, let's say. So what we're seeing in May actually is giving us a snapshot of what was going on in the housing market 2 months prior to that. So about March. Now, the orange line here is that sell price to list price ratio month on month. The blue bar is the number of homes sold. What's really important is this orange line, because as you can see, The average in March, April, May, remember that's January, February, March, really sold sales, homes going under agreement, 110%. So anything from 5 to 7% more than we've historically seen. That's a very high ratio. Not exclusively, we see that in Arlington, we see it in other towns too, but that's a high ratio. That shows us that we've got very, very high buyer demand and confidence in the Arlington market, and they're willing to pay much higher prices than they were previously. So we can see that, of course, in our average prices. Here we are here. This is the average sale price in Arlington. In 2020, a little bit higher than 19, about 925 from recollection. As you can see here, the rolling average, blue is historical, green is month on month for 2021. The rolling average is over 100%. Now, that might begin to kind of correct itself as it moves forward. It usually does. So, but still, we may well see the average price in Arlington exceeding $1 million in 2021. Again, because that ratio is high, buyers have confidence in the market. They're having to compete, and so they're driving those house prices higher, and that's what you see here, potentially 10% over the list price. So, I say 925 to $1 million, give or take, something around, around that kind of percentage. So we can see that too in the median, same idea. The median is a little bit lower, and we'll end up somewhere between 950, 975 and $1 million probably when the year is kind of all done. But very strong market in terms of single family. No question about that. Very, very strong market. One thing we started to look at in 2020 was the run rate of homes selling, because we were specifically interested in what was the impact of COVID going to be and how quickly will the housing market return to normal. So that's the information you see here. The blue in the back of this graph actually is 2019 cumulative home sales. I do it week by week. That's what you see there. The pink color is cumulative sales in 2020. Now, what you can see here, I can highlight this, that there is the impact of COVID. We had a relatively mild winter in 2020, 2019, 2020. But as soon as COVID hit, the number of home sales, number of home listings and sales was relatively static. It kind of flatlined. But once we got into that late April, early May timeframe, so it rose. And by the time we got to middle of the year, to the kind of fall market, we were at about parity. So we saw a net reduction because of COVID. And you can see that a little clearer in this graph, which is the difference between 2019 and 2020. This here is the mild winter. Sellers feeling confident to bring their homes on the market earlier than they were in 2019. Well, that's COVID. That specifically this area here is the impact of COVID and its impact on the housing market. We saw a dramatic reduction in the number of homes that were coming on the market. But then it recovered such that at the end of the year, albeit we were only 5 homes up, but we'd recovered to the numbers that we'd made up for all this loss that we saw in the middle of the year. What's interesting now is to look at 2021 versus 2019. And what I'm trying to do here is get a sense of 2020 was an anomaly. There's a lot going on there, specifically because of the impact of COVID and lockdown and so on. Are we seeing, because of this change, I'll talk more about this in a moment, change in buyer demands in terms of the homes that they're looking for, is that going to have a material impact on the Arlington market, positive or negative? So, or are we going to go back to business as usual, if you like, in terms of where we were in 2019? So what I'm showing here is the difference between 2019 and 2021. As you can see, we are tracking a little bit, the shape of that graph is very similar. We're tracking a little bit higher than we've seen in 2019, but not appreciably. Potentially that increase, if I can kind of highlight it here, the increase you're seeing there in that April timeframe may well be that sellers beginning to understand that it's a very strong market. We're seeing a lot of buyer demand. It's pushing house prices higher, and so more sellers coming into the market. But there really isn't a lot of headroom there for a lot more sellers to come into the market. And so it looks very much, based on the run rate so far, we'll know a little more in a month's time, I think. That's when we'll be able to see whether we are going to contract parallel to 19 or whether we'll see an increase. My prediction is that we will begin to track parallel to 2019. So the number of home sales and the run rate of home sales we saw in 2019 will very much mirror what we see in 2021. So it's back to business as usual. You can kind of see this. This is again the difference between 19 and 2021. You see it's a little bit up or down, but overall, currently we're up about 6 properties in terms of the run rate at the end of May than we were the year before. No, 2019, excuse me. Almost a difference. In terms of condominiums, I'll turn my attention to that now. We see a little bit more fluctuation in terms of condominiums, in terms of the number that sell. Blue here is existing homes. Green is new construction. Not that much new construction condos are cleared, as you can see. Excuse me. It fluctuates a little bit. It's kind of the norm, as you can see. We're running at a relatively similar to the single family, around about the same number of homes, condominiums selling year on year that we've seen previously. If I look at the average sale price here, you can see it's up a little, but not anywhere near as much as we saw in single families. So it has kind of dipped up a little bit, but not like we've seen in single families. This, to some extent, is a shift in buyer requirements, if you will. And there's 2 things at play here. First of all, in general, specifically after COVID, buyers are looking for a single family. They don't necessarily want shared space. That's still kind of in their thinking. I don't want to necessarily be sharing my space with somebody else. That's why single family, first of all, sell for a higher price, of course, but also we see much higher demand for single family homes. On the other side of that, of course, is that single condominiums running at about 700,000, average price of single family has risen to well over $1 million. So it's cheaper in general. They are more affordable. Condominiums are more affordable. So we've got these kind of competing factors here. One, they're more affordable. I really would prefer a single family. So we've not necessarily seen a high increase in the condominium sale price in terms of the average. The median, a little bit higher too, but still the median just over 700,000. Remember, when we think about single family, that's upwards of $1 million. In terms of that sale price to list price ratio, you can see, again, this is the 10-year average. A little bit of a reduction in that 2019-2020 timeframe. And specifically in 2020, it dropped to, he says, 101. Still a strong market. We need to put a caveat to this. Even though it looks, it's reduced from what we saw in 17 and 18, 101 is still a very, very strong market. It's just not as strong as it's previously been. That reduction in 2020, we kind of break it down month by month. You can see that ratio declined as the year moved on. The reason we saw that is we saw an increase in the number of condominiums coming on the market. So we saw more condos coming on. There is that, we're still in COVID, that reluctance to some extent to be in a condo because of the shared space in comparison to single family. Conversely, of course, they're a little bit cheaper. And you can see that as I do that cumulative run rate. There it is here. Tracked very similar to 2019 versus 20. Tracked very similar until we got to, this time frame here, that August time frame. Then the number of condominiums rose. And because the number of condominiums rose, we did see a reduction in that sale price. There were just a little bit too many condos to satisfy the market. And that depressed that ratio and depressed prices a little bit too at the second half of 2020. You can see that in this kind of cumulative graph here. Now, looking at, again, like we did with single family, 2021 versus 2019, here it is here, we are tracking at a higher run rate, albeit, we were at 80 this time last year, now we're at about 105, maybe 110. a little bit higher. Some of that is natural fluctuation, I think. We'll see again, like I mentioned with single family, I really do want to see as we move this forward another month, is that run rate going to continue to increase, or will it just run parallel to what we saw in 2019? Are we basically going to get back to business as usual? And we're seeing some normal fluctuations in terms of the number of condos that come in year on year. So a little bit more data will help us answer that question with a lot more accuracy. So let's take a look at a kind of wider perspective. And it's interesting to look a little bit at what changing buyer demand, what changing housing demands are in today's buyers. I took this from Keeping Current Matters. It was a survey that was done by Realtor.com. Almost everything you see here kind of playing out in the Arlington market. The home no longer meets my needs. Maybe I've got to work from home 3 days a week. Maybe I'm looking for a little bit more space. I'm looking for a basement where I can put an office, whatever it may be. So the changing buyers' requirements and reevaluating a little bit what their requirements are for a house, that's driving a lot of the housing market. So does it meet my needs? A little bit of profit taking, of course. As I mentioned that with the single family specifically, as the number sellers understand that, guess what, this is a bumper year, more sellers come into the market, profit taking if you want, from the economics world. That we're seeing that as well. Do I want a smaller home? Do I want less work? Thinking about downsizes here. Do I want to move into a smaller home? Do I want to move into a home that doesn't necessarily have to worry about the snow removal in the winter, which is coming, it's sweltering today, but guess what? Winter's coming eventually. Is that what I'm looking for? Do I want to live closer to family and friends? I mean, am I reevaluating where I want to be? And again, really an impact, kind of summing up really COVID per se. Do I want different features in my home and different amenities in my town? Because guess what? I'm going to be spending more time in my house today than I did in 2019. And therefore I need a different house, be it bigger, be it different in layout, be it, say an unfinished basement where I can put an office, whatever it may be, finished basement where I can put an office and so on. So definitely some changing housing demands, that's for sure. Now, in terms of what's driving the housing market, we can see that if we look at some demographics. This is population tree from the US Census Bureau from 2015. The shape is what matters, not necessarily the absolute numbers. We should hopefully get updated data this year, given that we all did a census last year. Two areas that are particularly important. The higher orange bar there is the baby boomers, the children born after World War II, now getting to retirement and therefore downsizing age. The lower orange bar are the first-time home buyers, the so-called millennials. They are looking to jump into the housing market. Now, if you think about the Arlington market, in general, in comparison to the towns around Belmont, Winchester, Lexington, it's more affordable. You might argue that $1 million is not really affordable, but that's kind of the average. So it's more affordable than the towns around. So a home seller in Winchester looking to downsize, Arlington's a great destination. Thinking about first-time home buyers, they want a good school system, maybe not today, but moving forward they do. They want to be relatively close to Boston. They want a vibrant town too, both downsizers and first-time home buyers, and Arlington definitely has that, and we'll get back to it now, as the restaurant areas pick up and so on. And so Arlington finds itself in this kind of perfect storm of downsizers wanting to move into it because it's close to where I live and it's more affordable than where I live today. First-time home buyers wanting to move into it because it's close to Boston, vibrant town, good schools, and so on. And so this is the reason why the Arlington housing market has been so strong for so long. These two groups. So that's kind of the main driver of the market, not just of an Arlington, other towns too, of course, and specifically of the towns around it. This same effect kicks in there as well. In terms of interest rates, kind of interesting to see where they are. It really is not an impediment. If anything, it's kind of positive for today's buyers, which is why we're seeing so many buyers in the market. They're very, very low, even compared to 2018, where we were at 4.5%, which at the time we thought was really low. Here we are anywhere from high 2s, 3, this is 30-year fixed, for example. Looking at an ARM, 5, 10, 1 ARM, you'd be under 3% probably at this point. So mortgage interest rates historically low, that's really enabling the market, and that's the key message to come out of these mortgage interest rates. It really is an enabler to the market. And looking at the predictions the bankers are giving us, these interest rates could well remain throughout 2021 into 2022, which is good news. So that was kind of where we are. What about predictions moving forward? Where do we think this housing market's going to go? So buyers and sellers, let's kind of break those two groups apart first of all. From a buyer's perspective, similar to what we've seen in the past, there are way more buyers in the market than there are homes to buy. Very, very low inventory levels, in fact lower than we've seen for a while as well actually, but there are lots and lots of buyers in this market, and they are willing, in many cases they are being forced, to pay high prices for the homes that they want to move into Arlington. So from a buyer's perspective, it's a tough market. There are a lot of them. Clearly many of them will already have bought, but looking at the activity we are seeing on homes that we're listing in Arlington, there are a lot more buyers around than we would ordinarily expect at this time of year. And that clearly will continue because there just simply are not enough homes for those buyers to buy throughout the rest of 2021. So from a buyer's perspective, lots of them, it's a tough market. This is not true just of Arlington, it's true of other towns too. As people reevaluate their housing requirements, so they're back into the market in force, and that's very much the case. So it's a tough market to buy in Arlington. Now, from a seller's perspective, it's a great time to be a seller. There's no question about that. It is a very strong seller's market. Homes that come on that are priced well, that are presented well, move-in ready, that's when the buyers will come into the market and pay a lot for the home, realistically. Remembering from this perspective too, and I mentioned that, move-in ready, because it's really important. Today's buyers, they're having to be pushed to how much they have to pay for a home. They're borrowing as much as they possibly can. They're putting all of their down payment down. What that means is they don't have any more money to do any renovations. And so the homes that sell and sell well in Arlington are those that are move-in ready, where they can literally on closing day, they can move in and they're in. They don't have to think about, I have to do this, because they simply don't have the money. It is simply too expensive at an average price of $1 million to move into the town and then renovate. They just don't have the money to do that. And so, I mentioned that move-in ready. It's very, very important. Thinking about today's buyers, we have more to say this in our sellers masterclass as well. But it very, very, the homes that are selling for that 110, 115, 120% over asking, they are the homes that are move-in ready. And so they're really, from a seller's perspective, yes, it's a great time to jump into the market. No question, there will not be enough sellers in the market this year to satisfy the buyer demand. That's absolutely clear. In order to get the maximum price though, move-in ready is the key word. That is the key word. Don't anticipate that today's buyers will pay a premium for your property if they have to keep money set aside in order to be able to do that renovation, replace the kitchen, do the painting, whatever it may be, take the wallpaper down. They just won't have the resources to do that. So very, very strong buyer's market, but the price they have been forced to pay from a seller's perspective now means that move-in ready is the key word. That is the key. That's the key, the mantra, if you will, that all sellers should be having today. Because once you bring your home on the market and it is move-in ready, it's priced well, it will sell. And as you can see, the average of 110% over asking price. So that will also continue. We'll have the traditional slowdown that we see in late July and in August as more people find they're able to go on vacation. We couldn't in 2020, so there's going to be a huge demand for vacation in 2021, that's for sure. So we will see the traditional slowdown in the summer months. We can say that with very high precision, and then it'll come back again in the full market. So the shape of the number of homes coming on and the activity in the market reverting to very much to where we were historically in 2019 and so on. So that is the Arlington market update. I hope that was very useful for you. We do this because we really do want our clients, buyers and selling, to be the smartest person at the closing table. That's really what it is that we're all about here, because everybody benefits really from being smarter about home buying and selling. And so that's really why we do this masterclass. Every month, we update it every month. So check back in a month and we'll have June's data. I think that will give us a little bit of information, will give us a lot more precision in terms of where we see the market going for the rest of 2021. So I'm looking forward to next month, because I do think we'll have a better insight. We have a good insight today, but I will have a better insight in a month's time in terms of what the market's going to do. So with that, I'll say thank you. Hopefully you enjoyed this market update. We're back in a month's time with the next Arlington market update. So with that, I'll say goodbye.